Good morning, good afternoon, good day. Welcome to my weekend market roundup, 10th July 2021. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Hi, Dr. Jeffrey. Good morning. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use in my trading. They run on the underlying TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system, starting with a look at the global markets. Australian index AXJO. Now the weekly has three bearish backdrop colors. Price is moving sideways. In the daily, after displaying the bearish headwind, price could not go up. Friday's candle shape is indecisive. Color is bearish. In any case, when the price is moving in such a sideways range, the color doesn't mean much. We will avoid taking any swing trade unless it can break out of that narrow range. Japan Topics Index. Not in an uptrend. It was moving sideways. This week's backdrop color is bearish, shape is indecisive. In daily, it was inside a triangle pattern. Friday had a gap down move at the open. After that, it tried to go down further, shown by the lower tail, then recovered but closed just at the trend line support. That may act as resistance now. If from here price goes down, that will be a shorting opportunity. In this case, price went below a support, came back to that, and if it goes down, I'm saying that that will be a shorting opportunity. If a similar situation happened at the yellow direction line or 50-day moving average, the Q system yellow direction line is not exactly 50-day moving average, but in HGSI terms, in the alternate template, it will be 50-day moving average. If the same situation happened at the yellow line, that would be termed as ice hole failure. There was a question from a gentleman, an email. He asked about ice hole failure, and I mentioned I will explain that in the video, that is easier. So I partly explained it. I will explain it further with few other USA stock examples. And ice hole failure, like many other HJSI like indicators, I incorporated them in my trading system and also shared the templates with other Q traders. All of those are based on what I learned from Dr. Jeffrey's videos. Topics is also moving sideways. If anything, it is bearish. Of course, we see there is a trend line support in weekly nearby that will prevent me from taking too many short trades, even if daily goes down next week. Not in an uptrend, sideways to slightly more bearish than that. China market. By the way, in the last webinar, when we looked at the global markets on Wednesday, pre-market, we saw all the global markets were moving sideways. Let's see if that is true. We see Australia is moving sideways, Japan sideways to bearish, And now China continuing inside the weekly as well as daily triangle pattern is continuing to be sideways. FTSE index, UK market, again it's moving sideways inside a triangle pattern in daily. Weekly is moving with overlapping candles, not going up or down. And lastly, India's Nifty 50, not in an uptrend. If anything, it broke below the trendline support of the triangle pattern, similar to what we saw in the Japanese market. Japanese market had weekly trendline support and India has daily trendline support. Weekly is also there, some distance away, but those are reasons enough not to take short trades, but not able to take long trades also. All the global markets either remained as sideways as we saw in Wednesday pre-market session, or it turned a little bit more bearish than that, not bullish. That is very different from what we saw in the USA market. USA market is looking very bullish. I'll analyze further, but I want to make some overall comment. You have seen I have a tendency to short the top and buy the bottom, and I can do trend following trades also, pullback trades also, but I am pretty good, I think, in catching the top and bottom. So when the USA market is very strong, why it is strong? If I now look at the market ETFs, let's start with SPY. I'm now using the 3 chart template, the weekly, daily Q chart template and the alternate chart template daily. That's based on HSI like indicators. The weekly, daily both are very bullish, made a new all-time high, very strong. If I look at QQQ, Nasdaq 100, just shy of making a new all-time high on Friday, but on a weekly basis, it made a new all-time high. And even though a bearish headwind appeared, and I mentioned that earlier, even if the bearish headwind came, possible reversal signal, it had a long lower tail, and more importantly than that, we had trendline support, so we are not going to think of shorting. That would be a good idea. On Thursday, it reversed right from the trendline support. These trend lines work very well, and I use them in my trading every week. This week, in this session also, I will show you some buying opportunities using trendline support. They work pretty well. One reason is the supports work well. Other reason I say they work well because the stop loss tends to be narrow. QQQ very strong, weekly new all-time high. Dia, I remember when I made the webinar on this day, I mentioned that looking at the strength of Nasdaq 100 SPX at that time, I thought it will, Dia would also go up and make a new all-time high. That didn't happen immediately. I also mentioned, though I had that feeling, I was not going to buy because the trend line resistance was just above closing price of that candle. That is when I had the webinar, right on that day, green color last candle. That trend line resistance worked well. It came down and then Thursday recovered after opening lower. Friday went up, broke above the trend line resistance. Now it's even more likely that it will go up and make a new all-time high. Weekly is also bullish in color and shape. We can see that DIA is still hugely underperforming SPX. We can see in the alternate symbols we have a kahuna on Friday, also a Mobo breakout. Mobo breakout and kahuna both came on Friday. bullish pressure as well in Q signals. So Friday was very bullish in dia as well. Didn't make a new all-time high on weekly or daily, but close to making that. And lastly, IWM. When IWM was somewhere here, I remember right on this day, I made a video live session on YouTube and I mentioned I was not going to buy dia and IWM at that time. If anything, I was going to short them. Both dia IWM turned out to be weaker during the subsequent days and weeks. IWM is the weakest. Fell most from that webinar. Thursday, gap down open, recovered, not very bullishly because had an upper tail also. Friday recovered better, but still it is in a downtrend. Okay, I should be careful. If you consider from this day to the Friday's close, then it is looking like in a downtrend. But that may be too short a period. It will be more appropriate to say that it is moving sideways, bound by trendline resistance, trendline support, and it is in the middle of that sideways range. That's a no trading zone. In a sideways range, buys are at the lower end, shorting is at the upper end. This is the day when I mentioned I was not going to buy IWM. Now it is in a situation where I will neither buy nor short. Overall, if you look at IWM, it is sideways, but dia is bullish and QQQ SPY very bullish. That is very different from the global market. Now, is this strength only limited to mega caps? In last 3-4 webinars, I showed using data-based analysis that the strength was from mega caps. Is that still true? And we'll see something very interesting. At least I found it interesting. That is not true anymore based on last week's moves. Was it really last week's move? No. We have to say based on Friday's move, and that's what made it interesting to me, and I'll explain more. Let's look at megacap top 20. Still in an uptrend, very clear uptrend, many trend lines support. There is no question of shorting. The last 2 days may not be easy to see. Last 2 days, the copper color line, which is relative performance, tilted down. So if you see last 3 days or 4 days, it didn't go up anymore, moving sideways. So that is true for Friday also. Thursday also didn't go up. Whereas SPY made new all-time high. QQQ close to that. That may tell that Friday's market gain was not led by mega caps. And let's look at the USA composites market breadth to see if that hypothesis is true. Nasdaq and NYSE market breadth, the yellow line tilted up on Friday. But previous to that, it was moving downward. Only Friday it went up. Yellow line, that is the percentage of stocks above 50 MA for the whole of Nasdaq and for the whole of NYSE. Friday was bullish, and Friday had very high advanced decline reading and up down volume reading, which resulted in accumulation counts in both Nasdaq and NYSE. Also, 3-month new high low not only sharply went up, you see it was coming down. This was a down move of more than 20%, another down move of more than 20%, that was Nasdaq. NYSE also moving down to nearby down move of more than 20%, and on Friday it had a sharp up move, of course much more than 20% shown by the green dot. So that is also showing broad strength because this 3-month new high low is on the whole of the indices. Sorry, not indices, whole of the exchanges, Nasdaq, NYSE. So that is showing broad strength, which was not present earlier. Now, so far it is showing bullishness, unusual bullishness, I may say, and others may be buying. I am also more long, actually, no short position as of Friday's close, but I will also make some comment later. I will come to that. But let's look at the divergence that was there, bearish divergence in advanced decline, up down volume for both Nasdaq and NYSE. That has worked out now because of the Friday's move. I changed to weekly interval. The divergence for market internals is best read on the weekly interval, and I changed it, and it seems the bearish divergence has played out. Now, if we look at the candle charts, QQQ, SPY, they were steadily going up, whereas we saw this bearish divergence of internals, advanced decline, up down volume. That conclusion, from that, the conclusion was that non-mega cap, non-very large cap stocks were coming down. They were coming down, but if I again change back to daily interval, there was no distribution count, and I tweeted about it earlier. In fact, I tweeted about it before Friday's market. So, and of course, I am sharing it all the YouTube sessions, that though there was bearish divergence, though the yellow lines were coming down, there was no heavy selling. Heavy selling would lead to distribution count. There was no distribution count. Instead, we have found 2 accumulation counts already. The bearish divergence of advanced decline, up down volume seems to have played out. And now if we look at the very useful market breadth total view, we'll get even more insight. Daily interval, percentage of stocks above 50 MA, and these are not on one exchange or index. These are combined insights from 2 exchanges, Nasdaq, NYSE, and 4 indices, S&P 1500, 500, Nasdaq 100, and Dow Jones Industrials. That is showing the yellow line there was also coming down. If we look at longer period, it was coming down all along. On Friday, it went up. Not only that, that move up was with 5 accumulation counts, not 1, not 2, not 3, 5. Only this one, that is Nasdaq 100, didn't show an accumulation count or accumulation day on Friday. All the other 2 exchanges as a whole and 3 major indices, so 5 together accumulation count, that is showing here. That is very bullish. And now I come to my statement that I wanted to make. I am bullish, but accumulation count of 5 at all-time high is also a concern. Though the concern is not visible everywhere, but still it is a concern. Doesn't mean market will go down next week, but I am cautious. It may go up and it may be irrational exuberance. Another thing you may see, 2 things. One is the 3-month new high low on these 5 items combined together. It was coming down. Again, more than 20% drop, more than 20% drop, and huge gain in one day. Of course, much more than 20%. Another thing we can now read, and that is the color of the candle, Friday's daily candle. That is cyan color. This cyan color candle comes on market breadth total view when it is an Eureka day. So we had an Eureka at market top, all-time high of SPY. That may also be a sign of irrational exuberance. So 2 possible sign of irrational exuberance. The very large accumulation count of 5 and an Eureka day at market top. Only Nasdaq 100 didn't show accumulation, and that is probably because the mega caps on Friday were not so strong. And that leads me to another statement I wanted to make. For a few times I have made it in several webinars that, and if you are watching the market, you have seen that sometimes mega caps are strong, sometimes small caps, sometimes industrials are strong, sometimes Nasdaq 100. And on Friday, it seems other than mega caps, not that mega caps were down, but the other stocks, the whole market as a whole went up. It seems, it's not a conspiracy theory or anything, but it seems market is working like that, that sometimes bigger stocks are bought or held up and non-bigger stocks are sold, and few days later the opposite is done. Small cap, large cap, mid cap are not sold on the same day. Why? Because if all of them were sold on the same day, then market will drop a lot. It seems like that. Not a conspiracy theory, but it's just an observation that this rotation between small cap, mid cap, small cap, large cap, tech stocks, industrial seems to be happening every week and sometimes every alternate day, sometimes even every day, alternate days. That is also not giving much confidence. At the same time, though it huge distribution, sorry, not accumulation count, Eureka day is a concern, but there is no sign of weakness. If we look at, for example, bucket analysis, again, this was included in QH based on input from Dr. Jeffrey, of course. HGSI, Edge Rater users were using it, but here we can see that in real time. Bucket analysis, that is put all the S&P 1500 stocks in 12 buckets, 1 to 10 equidistant buckets based on where they are inside their respective Bollinger Bands. Greater than 10, that is above Bollinger Band, less than 0, below Bollinger Band. Put all the S&P 1500 stocks in these 12 buckets, calculate the number, calculate the percentage, show the distribution. The distribution shows that red colors are more than green. If you check the area visually, that means overall it is still more below the mid Bollinger Band than above the mid Bollinger Band. Mid Bollinger Band would be this line in aggregate. So it's that market recovered, but stocks are still primarily below mid Bollinger Band. Or maybe you may say it's almost middle. If we look at the pie chart, 52% of S&P 1500 stocks are below mid Bollinger Band, 48% above. Just one day ago, that percentage was 27. From 27%, it jumped to 48% in a single day. That is 21% jump. That is also a concern. We saw Eureka, we saw 5 accumulation count, and we see 21% of stocks crossed the mid Bollinger Band. This is unusual. Of course, crossing is very normal, but 21% in a day is a bit abnormal. On the other hand, if we look at the percentage of stocks in the most extreme bucket, that is very small, only 4.4. And the gain was also minimal, not very large, only 0.5% to 4.4%. That was the gain on Friday, not more than 10%. So it didn't spend a lot of fuel to become extreme, and it didn't become extreme as well. So it may go further before we expect a pullback based on percentage of stocks in the most extreme higher bucket. Bucket analysis is not showing much warning. It's actually not much warning of irrational exuberance. It's overall more bearish than bullish, slightly more bearish than bullish. On the other hand, again, unusually bullish day across sectors, industries, stocks. 100% sectors went up, 100% industries also went up. That is unusual. It happens, but not often. This was a very bullish day. All the industries went up, and 93% of stocks went up. Later on, I will show that though all industries went up, if we look at the top 10 industries, which sectors are they in? Are they in growth sectors like IT? Are they in financials or other sectors? I will show that later. But this huge move suddenly after few days of weakness, and when global markets are still very much sideways, is something to note. May not be a concern, but something to note. And if we look at the 1 month to 1 day sector industry stock advance decline, we get another insight. And for many weeks now, I am showing and telling that the 1 day, 2 day periods keep on flip-flopping between red and green. My last webinar was Wednesday pre-market, and at that time 1 day, 2 day periods were red, and I mentioned in that webinar also that if the flip-flop continues, they will turn green again, and that happened. The flip-flop is therefore continuing. And what I also said in that and many previous videos, that though the flip-flop is continuing in 1 day, 2 day, the red color is silently propagating to the bigger time frames, bigger intervals, 5 day, 10 day, 1 month, and those periods are now bearish. You remember we are doing this webinar 2 times every week for many months. For many weeks and months, 1 month period was bullish. It seemed like forever. I remember mentioning in videos, it seemed like forever the 1 month period was bullish. Now, though market is at all-time high SPY, QQQ on weekly basis, 1 day, 2 day period turned very bullish. Friday was surprisingly bullish. 1 month period is now bearish, and so is 5 day, that is the week was actually bearish, and 10 day is also bearish. That is a concern. We don't want to be caught off guard by buying a lot of stocks at the top, especially if the stocks are breakout setups with stop loss that is far away. We don't want to be caught off guard in that. If there are stocks with low risk buy points, we'll buy them, and there are plenty of them, in fact, in very strong industries, and I'll share some of them. Here we still see some weakness, clear weakness, 5 day, 10 day, 1 month. Now let's go. Well, I told I will show the industries that are up. Let's say on Friday, choose the top 10 industries. My aim was to show the sectors they are in. Which sectors are they in? We can see it from the sector column. In these top 10 industries of Friday, do you see information technology? No, it isn't there. Do you see financials? No. Instead, we see consumer discretionary, few industrials, one even energy and materials. Industrial again, consumers. There is no information tech or financial, and incidentally no healthcare also in the best performing industries on Friday. But remember, every industry went up, 147 up, 0 down. So market is strong, all industries are up, but there was no infotech or healthcare or financial industry in the top 10. That was based on 1 day's performance. If I now do that based on 2 day performance, Thursday, Friday, let's look at the 10 best performers again. 10 best performers now over 2 days. Is there any infotech? No. Is there any financial? No. Is there any healthcare? No. Let's change it to 5 days. By the way, you can do many such analysis, informative analysis using these systems. Now I changed it to 5-day period. Now we look at the best performers again. Is there any infotech? No, in the top 10. Is there any financial? No. Is there any healthcare? No. So we have an idea that though market is strong, SPY, QQQ at or near all-time high, we know which industries are relatively strong. And if we now see the weekly period, the weekend review, we can look at the weekly period more. See the sectors: real estate, real estate, real estate, real estate, 4 real estate, 1 utilities. So 5 of the 10 best, okay, 1 consumer staples, 6 of the 10 best performing industries for the week are in defensive areas. That is also showing not that market is weak. We can never say market is weak, but we see which industries are relatively doing better, and what industries we see the best 10 industries, they are not what one would expect seeing SPYQQQ at all-time high. And why did it happen like that? That happened because other than Friday, till Thursday, the market's up move was driven largely by mega caps. Now let's look at technical breadth. Okay, I have to open that. Let's look at the weekly period first. Weekly, all signals balance between bears and bulls is not bullish. We may say it is 50-50 or slightly bearish. 54% bearish. Strength signal 63% bearish. Trend continuation 67% bearish. Reversal very bullish. And again this reversal figure became bullish only on Friday. Very large number of reversals. And as I say, if I combine the strength being bearish and reversals being bullish, overall we have to say that overall the strength bearish then reversal bullish, overall that becomes bullish. In the last webinar I talked about the bearish headwinds, and I showed that the bearish headwinds in weekly was not at an alert level. That was not showing an alert. That was useful because market didn't drop, and this is remaining overbought based on technical breadth in aggregate for the market, because much more than 50%, 58% of the bullish signals even in the weekly interval are coming from extreme high price levels. So it's overbought in terms of overall technical breadth. And daily is of course very bullish. And in fact, again, I will say it's surprisingly bullish. 97% of all signals bullish, 99. This has not happened for a long time. 99% of strength signals bullish, 96% of trend continuation, and 95% of reversal signals. This is unusually bullish. We'll see if that continues or not. And if we see the bar graph of bearish versus bullish signals, we see the size difference, bullish versus bearish. For trend continuation, gaps and reversals is hugely bullish, bearish almost non-existent. Technical breadth bullish, too bullish, and sector industry stock breadth bullish, too bullish. Bucket jump above midline, 21% jump in one day, too bullish. Bullish but too bullish. I have mostly actually I have all long positions now, and let's now look at many stocks and we'll find some interesting stocks to buy. As usual, I buy only low risk stocks. I had some short positions. Let's look at one, PBR. I only talk about stocks that I shared earlier. PBR I shorted earlier and I on this day, that is on Wednesday's webinar, pre-market webinar, I mentioned that it hit if it hit 100% profit target, I would exit partial position, and I did that. After the market open, I did that. I exited partial position with 100% profit. I had PBR put options, and the remaining position I actually closed. I closed on this day, I think. When it came to the yellow direction line, I thought it was already too far away from the recent high. It was oversold. It had the yellow direction line, so I decided to book my profit. Another bearish trade I had taken earlier, CCJ, again a trade that I shared publicly. I shorted it here. At this point I had 100% profit with naked put options. I booked profit, and then I was holding it through this lower high here. Here it had about 150% profit. It actually came down, but it was too far away from the entry point, and it had a trend line support in weekly. So I had good profit. I exited. Not that it turned bullish, but looking at the weekly memory support, I exited around, I think, 150% profit on the remaining position. Now some healthcare stocks. I have many stocks to discuss today. I have still more than 20 minutes. Few healthcare stocks that I was accumulating. In the last webinar, if you remember, I mentioned that I booked some profit somewhere here. This is FLGT when it was coming down. But those stocks I was tracking for a long time, and I'm still tracking. Very strong fundamentals. Let's check that out again. I'm trying to train myself to hold these stocks longer. But what is happening in practice, I am buying, they are not sharply moving up. So I'm booking some profit. The moment I see they are starting to weaken, I book profit. When they make another swing low, I am buying again, making my position hold. I'm probably always holding some position, exiting some, and adding to the position again at a lower price. That's working out pretty well for me. But I am expecting someday it will sharply move up, and then I will continue to hold it. FLGT is one such stock. When I first started taking the position in few healthcare stocks, including this one, then the valuation was undervalued. Now it is medium valued. Earnings growth is there, high revenue growth, great earnings quality, short squeeze potential. And on Friday, in itself, 71% of peer stocks also went up. The graph shows not only EPS and revenue are high, the year-on-year growth shown by the line steadily going up. So again, I had booked some profit. I entered the position again, added to that position again on, I think, on Friday. And you see on Thursday it found support at the yellow direction line. So that was my plan, that when it comes to a support, I'll add to my position again, make it full position. So now I have a full position in FLGT, and I did the same thing in several other stocks. Let me show one more. Oh, which one? QDEL. And here I will make a comment. Here this stock dropped while the market was going up, made a nice base, saucer base in weekly. Weekly backdrop turned bullish. Actually, from this candle, this was probably the first candle with bullish color and bullish shape without upper tail. So I had long position. It went up in daily. I had a nice profit for swing trading. The moment it started to come down, I exited some position with profit. And again at the lower price level, I entered the position. And in this case, I saw the support was from the alternate chart, that is 50-day MA. That works as a very nice support. And fundamentally, again, why I am comfortably keeping on buying them at lower price points is because I have studied them for quite a long time. QDEL, like FLGT, in the same industry actually. Very strong. Its valuation still undervalued. Great earnings growth, revenue growth. Same short squeeze potential as we had an FLGT, earnings quality strong. Now one comment I wanted to make on QDEL, and that is a positive for the stock. I think one of these days, probably on this sharp down move day, maybe the market was also down, but one of these days there was a news, if I'm not mistaken, about the stock. It was QDEL, I think. Okay, let me open the news one just to make sure I'm not making any mistake. Yes, this was the news. QDEL recalls Lyra COVID diagnostic test due to potential false negative results. There was no reported injury or death or severe illness, but there were many false negatives. I think FDA also asked them to recall something like that. You may read the news. That came on 8th July. That seemed like a very negative news. 8th July, right? Now let's go back to the chart. Just to make sure the stock is QDEL here. See 8th July. 7th July, in fact, the price dropped. What was the time of the report? 6:21 a.m. It came on Trade Station News Monitor, so people probably knew it one day earlier. 6:21 a.m. So 7th July probably people knew, those who know the stock. So 7th July, in fact, the biggest down move happened. It was the biggest down move in 1 month seen in the alternative chart, daily chart. And why I was more confident to buy, that in spite of that apparently pretty negative news, it found support. Very next day it went up, and from alternate chart we see it went up from 50-day moving average. So I was comfortable adding to my position again, make QDEL also full position in spite of that apparent negative news. And that shows once again that I don't rely too much on news. If anything, on a negative news, if I see stock is going up, I buy, and fundamentals are good. In spite of that recall of the toolkit, it went up. So I have a full position again in QDEL and several other healthcare stocks also. Now let's look at one utility stock I shared in, I think, the last webinar. That would be on this day. And I mentioned one could consider buying looking at the long lower tail candles in weekly, price finding support at the watermark. And I remember why I came to this. It was trying to explain that how one may use this cluster of indecision at the bottom signals to anticipate a move and buy. Not the best buy setup in terms of Q guidelines, but this was an example of how to anticipate a trade looking at this indecision at the top. And so far the stock is working all right. In fact, if anything, I think the long lower tails are bullish. It's finding support at the yellow line. We'll have to see if it goes up. It's utility stock, defensive stock, seems to be creating a double and triple bottom at this price. The traffic light color has turned bullish. The shapes are bullish. We have to see if it can clear the high of these upper tails. That will be bullish. There was no Q trade setup once again because the weekly was magenta. It was an example of how to use the indecision at the bottom signals. That was EVRG. Now I will share two non-Q type stocks, BNGO. I in fact shared BNGO. Many of these stocks I share publicly before knowing the result, and BNGO was one of them. But this is not a typical Q stock. But why did I and how did I identify it? And I I had a call with a few other traders earlier in the day, and I mentioned to them what I tell often. For successful trading, consistently profitable trading, the technique has to be consistent. Part of the technique is how am I identifying stocks? And I am sharing the trades before knowing the result. How am I able to identify these stocks? And I sometimes mention it. I think always I mention it. Sometimes there are Q setups. And in this case, see how I found it. Not from Q scan or sonar. This was a very bearish day. I shared it 2 days ago. That was a very bearish day. And I mentioned when a stock goes above its previous day's high on such a down day, you may investigate more. That was BNGO. And the snapshots is always important to see how the snapshots look like. When I first identified them, life science tools and services industry was strong relative to what it was earlier. That allowed me to buy, and it was a very bearish day. In real time, I saw this stock was up 4.29%, has earnings growth, short squeeze potential, and it was a very bearish day. Again, you can see that from 92% of peer stocks being down. The stock had revenue growth as well, and year on year earnings growth went up. Sorry, year on year revenue growth was also going up, this line. Earnings growth came down, went up. Now, if you look at the actual numbers, quarter 0 to quarter -7, 8 quarters, latest to earliest for earnings, the company is not making money. We can see that from here also, EPS is negative, but the negative number is reducing. If you read, it is reducing. And revenue, very small. If you see a last quarter revenue, 3 million only, very small revenue. So it is going up, but very small revenue. So why did I still share this stock? Firstly, it went up on a bullish day, on a very bearish day. That's how I identified it, and then I investigated, and good, the news panel is there. Let's look at BNGO. It is a genomics stock, genomics related stock. And I looked up the stock on Icon or Zenith, and there was a news on that day, that is this day, 2 days ago. So this day, BNGO, this bio nanogenomics, highlights back-to-back publication in American Journal of Human Genetics comparing original genome mapping, blah blah blah. I am not an expert, but I did read the news here and also on Icon. It seems they have a technology or method that gives better result than conventional genome mapping, something like that. So that looked, to me, being novice in that area, of course, like most industries, I am novice, but it looked promising. So I looked at the chart and I shared it. Okay, let's look at the original sharing. This is how the chart was looking like. Why I said it's not a typical Q trend, because I wouldn't buy a stock in front of a trend line resistance in daily and weekly. But when I shared it, I saw it did have a bull release signal after a down move. It was a very bearish day on that day, and it was going up. On intraday chart, I could see that it was going up sharply. So I in fact took a long position in BNGO. I took a position using stock, and I took a position using, in fact, options also. And the options I made naked call options, expiry far away. So I'm expecting to close at least part of that position if the stock comes to $9. Currently it is $6. When I shared it first, $6.6. If it comes to 9, I may close part of the call positions. It will have more than 100% profit by that time for sure. And I will also see what to do with the stock based on the price move. It's a low price stock. These stocks may go up and down, so I sized accordingly. But so far it's doing all right. I have a decent profit in the trade. This is when I entered it. I entered and then I shared the idea. So I entered it somewhat before exactly what it is looking like on this chart. And let's look at BNGO. See, I shared it on this day when the bull release came. And I entered it using intraday chart. How did I find it? Based on the news, the stock was moving, and I'll explain exactly how I found it. And from there it went up. I had out of the money call that made a decent profit, and the stock is also having some profit. The trendline resistances are still there. Even if it goes to the lowest trendline resistance and reverses from there, I'll have a pretty decent profit in the trade. Now, how did I find BNGO? It's good it had a news. It's good it was going up on a down day, but this is a low price stock, less than $10 and not much revenue growth, not great fundamentals. How did I find it? And this is where the Q Vital comes handy. Remember QDale and FLGT? I think the exact stock was FLGT, also in same industry as QDale, because I was tracking these stocks. I was buying, selling, adding again. I was also checking their PR strength. And when I do that, sometimes I go and look at the stocks. It was a down day, and at that time I sorted the stocks, and BNGO was actually there. See the PR stock. On that day, 2 days ago, when I did that, somewhere here reflected in this number, on that day, most of the stocks I showed you on the snapshot, most of the, how many percentage? Let's review again. See, 92% of peer stocks of BNGO, which is peer stock of FLGT, which I was actually tracking, were down. But I did the peer analysis and I saw BNGO was up on that day. And that is how I found the stock. And again, I make the comment I made earlier. If the steps are repeatable, you have a systematic approach, you will find these interesting stocks. You will find the news. If it looks promising, you will take a position and you will probably manage risk. I hope so. So this is one stock, not usual typical Q setup, but I shared it and now I explained exactly how I found the stock also. Now I want to show one more stock. This is not my discovery. This is a stock I found from a Skype group of very talented traders. They mostly use IBD methodology. I don't use IBD methodology, but I have high respect. Now this has certainly no cup and handle setup or anything, but it is a new IPO. IBD does have a technique to take new IPOs. I don't know the exact technique, but this is a stock that a gentleman, very respected gentleman, IBD style investor shared, and he tracks IPOs also. From the weekly daily, we cannot make up anything, but let's look at the intraday 10-minute chart. He shared it on the Skype group on this day, on Friday, in fact, that it was breaking out. Of course, he didn't use the Q template, this intraday template. If he had this template, he would have been able to pick it up faster. I don't know exactly where he shared it, but when he shared it on the Skype group, I did look it up using at a glance, which had no signal, of course, very new IPO. I looked at it on intraday fine-tune chart. That looked very promising. Why? Because if the timing was right, I could buy here. If it is little bit late, don't remember exactly when the gentleman shared it, somewhere here, but my stop could still be below intraday low, and it was going up from Thursday market, Thursday, last few minutes also it went up with high volume, and Friday it was going up. So I did take a long position in DOCS, DOCS. This stock is DOCS. In station, I have set it up. You may see the interval and the ticker symbol DOCS. It seems very promising technology, and let's see what that is, or methodology you may say. Docs.k. I have many more stocks to cover, but I don't want to go too far beyond 1 hour. But many interesting stocks today. Here, very new IPO, so we don't expect any fundamentals. 1 day percentage change 9.1%. This has a digital platform for US medical professionals. Cloud-based platform. It helps them do many things on the cloud. Coordinating between doctors as well as connecting with patients, customers seems promising, and he shared some insight. Let me open Skype. I wanted to show something. I should give the credit as I am giving to that gentleman. I didn't find it. I'm just sharing. I don't want to give full name. I don't know his full name. Mr. Greg. And he shared some more interesting things, and that's what I wanted to tell you. I'm reading it on the other monitor. This is what he wrote. I am not saying I know from which source he said that. I don't know accuracy, but I think I have full confidence on him. He says they have 80% of US physicians and 50% of US nurse practitioners on their platform. That is huge. 80% of all US physicians and 50% of US nurse practitioners. It seems the doctors are very tech savvy in the USA, as they are. Just see Dr. Jeffrey. That is just incredible to me. This is what Mr. Greg is writing. That is just incredible to him and certainly to me also. And the ROE is a whopping 147.9%, and PTM, don't know, price to market, probably price to market cap, I don't know. PTM is 27.9, but ROE is good and zero debt. So that looked very promising. By the way, this statement that I just read out, that he made during the weekend. On Friday he showed the breakout, and I read about the stock on Zenith Icon and on Q Vital. Based on that, I have a long position in this stock also. And I see during the weekend he made those more additional comments. Huge percentage of doctors and nurses are on their platform, zero debt. So this may be a stock I am not in a hurry to sell at all. It's a recent IPO. I may just hold on to it with that kind of statistics. Not a Q trade, but I found it through Mr. Greg and I shared it with you now. May have a long way to go from here. Now few more stocks. Gold. Many people are not bullish even now, and I want to share now. It's always good to go back and see the snapshots when I shared it, and the more you go back on your own diary also, if you are capturing the snapshots, you will be able to fine tune your entry. This is what I shared 11 days ago, June 29th. Gold mining, this is not metal, gold mining industry was strengthening. Score was turning cyan. That allowed me to buy. I found Newmont, medium valuation, great earnings growth, some revenue growth. The industry peers were not so strong on that day, but this stock was, in fact, this stock was also down, marginally down, or you may say break even, minus 0.06% down in real time. Still, I thought of buying. Okay, let's ignore the seasonality. There was no seasonality. This is a chart of GLD, not of gold miner Newmont, but I saw the weekly for GLD had support, daily had support, and as I mentioned, these supports work very well. So I was willing to buy GLD. By the way, I look at GLD recent chart also. Right from this day, it didn't go down. It had weekly support, daily support. The more you study, the more you will be able to incorporate these memory trend lines into your trading entry decision, also exit decision. So gold looked right time to buy based on bounce kind of methodology, Q bounce technique. But Newmont chart was even better. It also had weekly support in the magnified portion at the right edge, daily support also, and the candles were even more bullish than gold itself. So I took a long position, and I showed this is Newmont again, the 4 week, 2 week, 1 week daily. Everything had trend line support. So I took a long position at that time. I shared it. Now if we see GLD now, see how it went up from the trend line support? Straight up if you look at the weekly. It also had a false downside breakout, reversal at watermark support with bull release. So that was a box setup. I didn't trade GLD this time. Right when GLD was at trend line support, now I see it has jumped up, but at that time it was right at support. I found also Newmont. I tend to buy stocks more than ETFs. Newmont also had trendline support in weekly daily. Right on this day, I identified it. If you notice carefully, the closing was actually marginally below previous day's low. But still using the bounce technique, I could buy it. And I mentioned at that time in the webinar, I took a synthetic long position without the protective put below it. So short the put by the call, and as you can see from the weekly, it is so far working out pretty well. Few more stocks. Semiconductor, SIMO, SIMO. I'm at 1 hour point. I'll try to go through them quickly. There is a trend line resistance. So this green line is of no consequence. It's a trend line support. When buying, support trend lines are not important. For some reason, it is still drawing the line, no problem. It stopped at the trend line resistance. So the Q guideline is on Monday, price goes up using the intraday template, early range breakout technique. We are allowed to buy. Weekly is looking bullish. In the alternate chart, we have a Kahuna. We also have 2 days in a row, biggest up move in a month. That is also bullish. Biggest up move in a month, 2 days in a row. Oh, am I saying reading it correctly? Yes, yes. Biggest up move in a month, 2 days in a row. Thursday, Friday. And not only Kahuna, Dr. Jeffrey's favorite setup, Mobo breakout from a squeeze with a Kahuna. All of them. And a PSA reversal and a green candle low. I am reading the HSI signals like as if I am using it for decades, but I have become very fond of them, identifying the momentum. I think HSI signals they are excellent for identifying momentum, and you can see why I looked at SIMO and I am sharing it. It still didn't clear the trend line resistance. On Monday, if it does that, I will be quite happy to buy because there are plenty of momentum signals in the alternate chart. The green candle low came on Thursday, which was also the biggest up move in 1 month. Friday, another biggest up move in 1 month. Again, Mobo breakout from squeeze with a Kahuna. So this is one interesting stock, and I should show the fundamentals. Usually if it's not an IPO new technology, I don't want to buy weak fundamental stocks, and I think this fundamentals was good. Great fundamentals. Not only 3-star, more than that, undervalued with earnings growth, also revenue growth. On Friday, the industry peers were very bullish. On Friday, everything was bullish. If we see the relative strength, we see relative strength is not so strong. However, when the market is so bullish and if we see the percentage up move, semiconductors still went up by 1.77, 1.8% almost. So that's a good enough reason to buy. And here I am finding a stock that is fundamentally very strong. This one fundamentally very strong and many momentum signals in the alternate template, just about to break out from trend line resistance. So that may be a buy on Monday. Now in last webinar I had this stock in my TradeStation panel, but I didn't have time to share. Last webinar that would be on this day. Actually based on Tuesday's market close. So on this day I had identified it. I wanted to share it in Wednesday pre-market session, but I didn't have time. In that video you would have found GBDC in my list in this panel. This has some characteristics I am very fond of, that is support in weekly, support in daily. That works very well. Another thing that works very well is support in weekly breaking out from daily. Did it break out from daily at that time or around that time? Let's check with the template that shows historical trend lines. Yes, it broke out of memory resistance, had trend line support in daily, and weekly we saw had trend line support. That's my one of my favorite and pretty profitable setup. Risk is always narrow. And after that, market was weak, so it came down, but always it had bullish shape candles. Stop would be below trend line support. That was never breached. On Friday it went up again. This is one stock I wanted to identify, a share. It was on my panel, didn't have time. On Friday it is giving a go with flow long setup. If you apply the checklist, bullish flow in daily, bullish backdrop in weekly, bullish shape in daily, near value area far from upper boundary, in a stock with higher high, higher low. So this is giving a valid go with flow trend following long trade setup. I am good in taking reversal trades, but I am very much okay, comfortable, quite good in fact in taking trend following trades also like this. Now here again, I I remember Dr. Jeffrey keeps on mentioning Mobo breakout from a squeeze with a Kahuna shown here also. That's great momentum. PSAR is already green. I'll not try to read the ISOL in the green color. So this is a momentum. Now I wanted to show also its fundamentals. Just the dividend alone will be good enough reason for me to buy GBDC. Not 20-30%, that would not be sustainable anyway. But let's look at GBDC. Dividend yield of 7.3%. This itself is good enough reason for me, and I am buying a stock that is undervalued with great earnings growth, some revenue growth, steady revenue, earning going up. With such fundamentals, this dividend itself is good enough for me to buy. And 89% of peer stocks went up on Friday when it gave a go with flow long setup. And if we wanted to check the relative strength, let's do that. I will probably need 10-15 minutes more if I have to cover everything I have planned. This is not the usual topics, but this may be of interest, the ISOL discussion also. See here in this case, unlike semiconductor stock, when I was studying SIMO, here the industry strength, relative strength is strong. In itself, it's much more stronger than semiconductor. That is expected, right? IT, information technology, was not among the top 10 industries. Let's look at the relative rotation scorecard. Bullish enough for me to buy. So this is one stock that gave a setup. I identified on Wednesday pre-market, but could be entered on Friday also using a different setup. Go with flow setup. Okay, few more stocks. If you like this, and this is in financial sector, you will like this even more probably. Okay, I am very fond of stocks that pull back to weekly and or daily, in this case weekly, trend line support ends with a bullish shape candle, and in daily I have multiple bullish headwind signals. Again, it is at or near lower boundary. If you apply the checklists on Friday, it has a bullish headwind reversal long setup. Interestingly, the bearish headwind at the top, which came in daily, weekly both, led to a severe price drop. And now I am using the headwind trend in the long direction. It is in fact confirming a headwind reversal long setup on Friday if you apply the checklist and see its fundamentals. If you like GBDC, we'll like Ben also. Let's look at Ben in same industry. That's why it came up. So the industry is strong. I will not have to look at the industry. And after Ben, I will show you another stock also in the same or similar industry. When you see multiple stocks, GBDC, Ben, and another one I will show shortly, all of them same or similar industry going up, we have even more confidence to buy. Great valuation, great earnings growth, great revenue growth. So these are what I am calling crown jewels, better than 3-star, same industry. Another stock in the same industry, FNF, Fidelity. You will love it if you are used to read the Q charts, trend line support in weekly, great shape, sharp pullback, and then finding support precisely at the trend line support, and again a bullish headwind, also bull release on daily. See the alternate signals. Biggest up move in 3 months, and I have many times mentioned, when a stock pulls back and gives a biggest up move in 3 months, that's not a sign of exhaustion, that's a sign of strength. Also a kahuna, also a pocket pivot, PSAR reversal, also a this one, yes, Bible gap up. This is a Bible gap up also, yes, Bible gap up. And if you are not remembering, sometimes you may right click on the registration indicator and you see it is BGU, so Bible gap up. Many momentum signals, and also a Q headwind reversal trade setup, FNF. And how is its fundamentals? Ben's fundamentals, great. And let's look at FNF. As I mentioned, there are some signs that market is getting overheated, but these are low risk entries in very strong fundamental stocks in strong industry. See, 98% of industries went up, stocks, peer stocks went up, 100% industries went up. FNF, great valuation, great earnings growth, great revenue growth. So crown jewel. If we look at the relative strength, great. Unlike semiconductor. Unlike semiconductor, its relative score went up. And if we see the rotation table, it's not the strongest, nowhere close to that, but see the acceleration. Q technique allows us to buy based on acceleration. It's one of the most accelerating industries on Friday. It's a turnaround candidate in terms of industry. So I found several stocks in financials, GBDC, Ben, FNF, very strong. SIMO in semiconductor, many momentum signals, but for SIMO, I'll wait for the breakout that may happen on Monday. Now let me spend a few minutes on ISOL. I started its discussion earlier. ISOL is a concept, again, I learned from Dr. Jeffrey, that is if a stock, by the way, I'm going to show a number of charts that is showing ISOL, but not necessarily everything is tradable, just like any other signal. A signal is a calculation, then we have to look at the chart, Q weekly daily chart, and for ISOL, the alternate template, to decide if it is tradable. Some of the stocks I selected here to show, intentionally I selected so that to explain some are not tradable for several reasons, and I will explain one by one. The ISOL concept is, if some living being, hopefully not any person or not any animal also, it's a concept. If this is what I learned from Dr. Jeffrey, that story behind it. Suppose we go to a place filled with ice. Once I went to Colorado, and I saw a huge lake. I think that was my first trip to the USA. Huge lake, it was totally frozen. And imagine I go into the totally frozen lake and the ice is not so strong, I fall down. And that is the concept of going below the yellow direction line. In case of alternate chart is 50-day moving average. So I fall below the ice. Then I try to go up but fail. That's called ice hole failure. Now that is of course most effective when the stock is already in a downtrend, already below 50-day moving average or yellow line, tries to go up, tries to raise its hand above the ice level, ice surface, and then goes down again. Now in this case, why I included this, it's not tradable. Firstly, it made higher high, higher low in the recent move. But even more importantly than that, why I say even more, because that seems to have changed to downtrend now, lower high, lower low. More importantly than that, these trend lines work very well. So just looking at ice hole failure, and interestingly, we have 3 ice hole failures in a row. So it's trying to raise its head above the ice level and failing for 3 days. That's bearish, but because of the trend line support in daily, weekly, I'm not going to short it. So if we are using Q system, at least the way I use it, if there is trend line support, I don't want to short it because there are other stocks with ISOL that doesn't have trend line support. Let me go through few more examples. I'll not spend time to look at its fundamentals. If fundamentals are strong, I may not short it because there will be fundamentally weak stocks with ISOL also. This one is looking weaker than the previous one, and intentionally I chose like this. It's already in downtrend below the yellow line in alternate chart, came down. On Friday, when market made new all-time high, it raised its head above the ice level, fell down again. Now interestingly, the stock was up on Friday. That is one important thing to note. If you just look at stocks that are down, you may miss many ISOL failures. ISOL failures is not necessarily a trade signal, but to be ready. So tomorrow, if Monday market is coming down, this stock is much more likely to come down and give us a very low risk shorting opportunity with stop just above this day's Friday's high. And why I selected it after the previous stock, see here, we don't have trend line support, instead we have trend line resistance in daily. Support in daily is far away. There is a weekly support, but that weekly support is this daily support. So we have very attractive reward risk ratio kind of bounce short setup, a stock that is not able to go up. In fact, it's a ISOL failure on the yellow line on Q chart also, and also on the alternate chart, which is 50 MA on alternate chart. Nowhere near all-time high. In fact, it came down. So on a closing basis, closed higher from Thursday, but clearly bearish candle on Friday. That is something that you may watch on Monday. If it goes down using intraday Q chart, we may take a short trade. I'm not looking at industry fundamental now. I don't have so much time. ANIP also is not a tradable one because it is moving sideways and has trend line support. Plus long lower tail, long upper tail also showing indecision. That is also clear from the sideways move. Weekly has also support. So this has a isol failure, but I will not try to trade it. When a stock is inside a range, I would rather try to buy at the lower edge, short at the upper edge, not try to short it now. Next one, H. This is a nice one. This is a nice one because it was below the yellow direction line, lower low, lower high. It had a large up move on Friday. Market was very bullish. Tried to go above the ice surface and just barely closed below it. So if it runs out of breath cannot breathe anymore, it will come down next week. And if it does that, the stop loss will be very narrow. We are able to short at the recent moves high. So one may keep an eye on this. By the way, here weekly, if you see, is it bullish? I sometimes say this long lower tails may be bullish. Yes, at the same time, it came right to the trend line support. And now if it reverses from there, that support also acts as a resistance. Another thing to note, see the down move 1 week ago, the volume, and see this week's volume. This week's volume almost invisible. I think you cannot see it, but you may check it on your chart. H. Hyatt Hotel, great hotel by the way. But almost no volume. So this, when you combine all the signals, this bullish shape candle of this week is not so bullish. When you combine the volume, when you take into account the fact that it came to the support, a reversal from there will be bearish, came to right at the yellow line, 50-day MA, that is a isol failure also. So we may be able to short it right at the top of the recent swing move. Few more. I'm explaining the isol failure in detail. CBB, Cincinnati Bell. This is looking a better one to short. Though it was moving sideways until this time, made a sharp lower low, came up, but just moved at the same price range as before. And on Friday, when market made new all-time high, SPY, QQQ went up, Dia went up, even IWM went up, Cincinnati Bell came down. Bearish traffic light reversed from trend line resistance, trend line support is far away. Backdrop in weekly, bearish in shape, bearish in color, relative performance sharply coming down in weekly, daily both. In alternate chart, came sharply below the yellow line, tried to go up. On Friday, raised its head above the ice level, sharply came down. That's the definition of isol failure, and this is tradable to me in terms of technicals. I will always look at fundamental industry. This is also a shorting the top, and I love the short the top. If Cincinnati Bell CBB has options, liquid options, I am happy to use naked put options. Well, few more isol failure day to day. This one has a isol failure but not tradable. Not tradable because there is trend line support. I take this trend line support seriously. It has a isol failure, and once again you can say isol failures can come on an up day. It even has a kahuna. Well, it has a kahuna. I should read it in the other order. Mobo breakout from a squeeze with a kahuna with 2 successive days of biggest up move in last 3 days. But still it can be a isol failure. In that way, isol failure can give you an early alert to short the high, not only of the swing high, right on the day's high also. Of course, we'll do it next day using intraday chart. This was FTV isol failure, but not tradable. 2 more. Allow me 2 more stocks to discuss. JBSS. This is more tradable. In overall downtrend, has trend line resistance, no trend line support. On Friday, it closed below the Q yellow direction line, below the alternate chart Q direction line also. It was already going down, tried to raise its head above the ice level, 50 MA or yellow direction line, failed. That made it a isol failure. Once again, it was an up day, in fact, non-insignificant large percentage, 3.6%. That means isol failure can lead us to a very low risk entry on the short direction. Last one, REX. This one is, I'll be less reluctant because it had a swing high, didn't make a swing low. Lower high, lower low is not there. So this one is not. So the ones that I will be happy to use isol failure to identify short trade, one is CBB and I think EAT, and there were probably one or two more EAT. These are low risk shorting opportunities, but I'll short them only if on Monday they are coming down and hopefully with the market. But I have mostly long positions in the market, and you can see I am finding trades in different ways. Docs I found as an IPO with the help of this gentleman, Mr. Greg. Great breakout, early range breakout with very high volume. I found BNGO, genomics company with some excellent news. Bought it using intraday chart right around this price level using option stock, both are in a profit. Option was out of the money, further away expiry, they are in a nice profit. Unusual, not typical Q trades. And then I have trades like GBDC, Q go with flow on Friday, Ben, headwind long on daily, bounce in weekly, and FNF, headwind long again in daily, bounce in weekly. So I am able to find, as you are able to find if you are using Q techniques, trades in almost all market conditions, and they tend to be overall profitable. At least that's what the shared ideas on the forum shows. That's what I'm saying, but you don't have to rely on, you shouldn't actually rely on what I'm saying. You may follow the ideas I share here before knowing the result and see how they are doing. If you are disciplined, that should make us some money. I always say if we are disciplined and having a systematic approach, not necessarily only using Q systems, I have high respect for IBDI, also for HGSA methodology, any of these three methodologies. I cannot actually talk about many methodologies that I have confidence on. I have certainly confidence on Q, but I also have equally high confidence on HGSA methodology and IBD. So long as you have a robust methodology and you are disciplined, there is no reason not to make money in the market, in any market in fact. I took a bit of more time, that was to explain ice hole failure. I hope I made some sense out of that. It is not something that I developed myself, learned it from Dr. Jeffrey and incorporated it as part of the Q system, though I don't sell them. I just offer it to people who already know about the HSI signals. Thanks once again for attending. I look forward to seeing you. Hi John, thank you for joining. I look forward to seeing you in our next session, which will be on Wednesday, 8 a.m. Eastern Standard Time. Most likely I will have that session. So I always inform the link and the exact time on Twitter page. Thank you once again. Keep safe and trade profitably. No reason not to do that. Thank you.